everybody. How we doing? Morning, Monkey, Church, JC, Peter, Ismet, Virginia. How we all doing? Look. Sorry, it's wet hair day today. Just got back from the gym. Thursday mornings, gym. Haven't done Thursday mornings for a while, so you haven't seen wet hair day for a while, have you? Look at my exit on my drawdown control on the US dollar yen yesterday. And look what happened to the US dollar yen yesterday. Couldn't make it up, could you? Literally, I got out with my drawdown control, which I did manually, at the very highest point it's ever traded at in 38 years. Great exit. Anyway, it's just not my it's not my month. So US dollar yen came down yesterday. This was US dollar negative news rather than yen strength. So if you look at all the other yen pairs, they didn't yesterday. So this is not the yen. The Swiss francs obviously had the CPI this morning. This is not the yen necessarily powering up. It did sort of stall out a little bit yesterday, but this was the US dollar yesterday, as you can see. So big down day yesterday on the US market. So I got a sniffy nose. So we're going to go through the news, have a look at what impact the CPI has had this morning from the Swiss, and prepare for the pound today, because obviously it's election day in the UK and it's also 4th of July. So there's no new US trading this afternoon. So no US indices this afternoon. Normally on a bank holiday in the US, you get very light liquidity in the UK markets and the Frankfurt session as well. So we'll watch these this morning. I'm long already on the FTSE. I can see the spread on the FTSE is even, the spread on the FTSE is huge this morning. Look at that for a spread, massive. So there's no volume, no liquidity this morning. So be very careful. It's almost worth not bothering this morning, really. I will let that one run. I had a pretty good day yesterday on the indices, so I'm going to let that one run today. We'll see what happens, but yeah, tends to be a bit of a quiet session. Morning, Neo. Morning, Mark. So overnight news. So just going back to yesterday evening, we had a lot of talk in the US yesterday from Biden's camp as to whether or not Biden will go forward to be president. He said he's going to continue to run, but it seems like there's discourse going on at the moment. So the that can cause a lot of disruption in dollar movement when you have stuff going on in politics. So we need to be aware of that. The Fed meeting minutes came out last night. So let's actually scroll back a little bit. Non-farm employment change came out as a negative. So we were forecasting a positive 163 off of 157. We got delivered a 150. So big negative there. The unemployment claims didn't change. The thing that really tanked the market yesterday was the services PMI. So if you go back and look at the PMIs for manufacturing on Monday, they were a miss. Wasn't quite 1%, but it was almost 1% down. We got delivered the services PMIs yesterday on a forecast of 52.6. We got 48.8. That is a huge, huge overestimation on that services PMIs. So that means that has come down dramatically, which takes a lot of pressure off of inflation. Services PMIs, purchasing managers indexes, these are basically, which basically is business, how much it costs businesses to buy their raw materials, goods, services, personnel, etc., which is passed on to CPI, which is then passed on to interest rates. So that coming down, or the services PMI coming down, means that there's a good chance CPI will drop. When CPI drops, interest rates drop. When interest rates drop, currency drops. So that number is why we got that tank on the US. So I think it's a little bit of an overreaction, what we got yesterday, because yes, as you can see, there's a gap there. So there's a good chance I'll probably do a gap filter down that. But yes, it has come down dramatically. Somebody knew about that the day before. But we still even if CPI comes down on the next reading, they're still not going to drop interest rates this year. So this is kind of a knee-jerk overreaction, really, I think, and we'll probably retrace this. But we'll see what the market makes of it today and see whether it continues. The problem, obviously, is today there is no market this afternoon. It's a bank holiday. We tapped straight into the low of that wick yesterday and hit a brick wall. So we know there were limit orders sitting there. You can see the limit orders. There's a whacking great wick there. As soon as they got to that level, they bought the crap out of it and sent it right back up again. Exactly the same. So limit orders triggered yesterday and put a halt on the move down. So it's whether or not they can get overrun today. And if they do, it will flip short. And if it does flip short on the US dollar CAD, what we're going to do is break out down into the monthly lows, last month's low and the previous month's low. So you're looking at going it's just within an ADR today. But I think the chances of it getting down there today are remote because we're not trading in the US. So yeah, lots of negative news on the US. I don't think it's really going to devalue it too much, but we'll have to wait and see what the market makes of it. But the market was certainly shocked by that number yesterday. FOMC meeting minutes came out yesterday. Several participants said if inflation were to persist at elevated levels or rise further, fund rate might need to be raised. So like the New Zealand dollar and the Aussie dollar, US dollar now potentially looking at one more rate increase. Now that CPI number has got to go up for that to happen. PMI number just dropped dramatically, which will feed into CPI. So I think there's not much chance of that happening. And obviously, when that came out, the US dollar did not rally through the roof. So I think the market is also thinking you're not going to put the rates up again. But we'll have to wait and see what happens. It's election year. Anything can happen. So other than that, nothing else came out of the FOMC last night. Hamas. God, completely forgot about the war in Gaza. Hasn't been on the news at all for weeks. It's over, isn't it? Basically, they've taken Gaza. So interested to have some news out of that. Completely gone out of your mind. There's other things happening, isn't there? I've just seen if there's anything from Japan because I haven't had a chance to look at the news this morning. No. Okay. So yeah, nothing from Japan overnight regarding intervention. So this morning we've had CPI. So today's news, we've got the CPI number, which has just come out at a 0. Again, like I said yesterday, I can't remember who it was. I think there was somebody in the CAD Swiss yesterday, and I said if that CPI number comes out anything less than a 0.1 tomorrow, that's going up. Swiss franc is going to drop like crazy because they're below inflation target. They've dropped interest rates twice without telling us. If that CPI number comes out lower, inflation is dropping further, they will drop interest rates further, which will devalue the Swiss. CAD Swiss will go through the roof, unfortunately. But that's what we've got this morning. So Swiss franc dropped dramatically. Not massively, I have to say. We've only had one ADR. We'll look at that in a minute. But we've had that 730. The CPI number came out as a 0.0. So we were expecting it to tick up. So inflation hasn't moved, but it hasn't gone up. So yeah, it's good news. Well, I say it's not really good news for the Swiss. It's because the Swiss were dropping rates anyway, so it doesn't really affect them. But as you can see, big push up on everything against the Swiss franc this morning, but only one ADR. So the only thing that's hit ADR is the CAD Swiss, obviously because we had that massive weakness in the US dollar, and that will have weakened the CAD a little bit yesterday. There's a little bit more liquidity in the CAD this morning, which is probably why it's hit that level, but that's it. So that's all we've had out of it today. It's not a massive news event. We're going to get a propulsion gap here at the moment. Obviously, this candle's just opened, so it could come all the way back down again. But certainly, Swiss franc remains bearish. There's no bullishness necessarily. So, but if you look at all these Swissies, the market is definitely due a correction on this. But at the moment, we're correcting this massive move. So we've hit that propulsion gap there. wasn't really a propulsion gap. That it was more of a shaped recovery move. So that is where the move kind of started. It's 150 ADR today up to this level. So if it pushes up a little bit more today, that is where we might find the sellers start to add in. And we look for that. But the Swiss is weak. So I think more likely we're going to look at something like that on the CAD Swiss anyway, and all Swiss pairs. We've got some weeklies. So if you're trading weekly range hits, Euro Swiss has just hit, Pound Swiss has just hit its weekly range as well. Pound US dollar has also hit its weekly range. I got into a short on that one yesterday on the RSI extension. And US dollar CAD also just got into a long on that one yesterday. Need to put some TPs on these. I'll go through my positions in a minute. Money. US dollar CAD, I'll go for a hit up there. But yeah, so that is our overnight news. So there's your CPI number and obviously the impact on the Swiss. Just see if there's no other news about the Swiss. So that's it. So today is all about the pound. So it's the parliamentary elections today. We're all going to vote. We're all going to get Labour in. Forecast is for a Labour supermajority. So there's 600 odd seats in the UK, or in the UK. They are forecast to get somewhere in the region of 2/3 of those, about 400 odd seats. So we're flipping completely away from the Conservatives, who are likely to get about 100. So I don't know what impact that is going to have on the pound. So it's unlikely there will be a massive amount of movement today. However, because obviously the results will tend to trickle out, what we'll find is when the results start to trickle out and there is confirmation of what's going on, that is when we might see a big move in the market. Don't forget, Bank of England controls monetary policy. The government have an input on it, but at the end of the day, really, it's the Bank of England. So it shouldn't have a massive impact, but we have seen 200, 300 ADR moves on election results before. So just bear that in mind. The proper results we're not going to find out at least until tomorrow, are we? When the different areas start to declare results. So we will get a good indication from an exit poll today, though, what is going on. So just be aware of that. Pound US dollar, for example, there's no US dollar trading, and there's unlikely to be a big move in the pound unless we find out some more information about what's going on with elections, and it's obviously a shock to the market. So unlikely we're really going to do a lot today, but we'll see what happens. So any pound pairs you've got with decent profit, it's worthwhile banking, basically. And just see if you can get it in the bank before it goes completely crazy. It may do absolutely nothing, but if you've got it and you want it, take it, because if it disappears away, you're not going to get it back and you're just going to be stuck in the position. So I haven't really got an awful lot. I've got a bit of pound US I can take. I had to take some DD control yesterday, so I'm holding positions a little bit longer to try and squeeze a bit more out of them. Maybe right, maybe wrong. But yeah, just bear that in mind today. So that's the news coming up for the day. We got construction PMIs at 9:30, and that's it. So tomorrow, obviously, is non-farm payroll day. So unemployment rate for the CAD and for the US comes out tomorrow. I'm doing a morning session tomorrow, so I'll obviously cover these again, but we're forecasting unemployment to go up in Canada and not to go up in the US. If it does go up in the US, obviously it's more negative for the US. So we could get another big further push down on those US pairs tomorrow. So we'll have to wait and see what happens with those. So from an ADR perspective, obviously we've gone through those. There's nothing hit its monthly ranges at the moment. We're still just really Swiss franc and these are obviously triggered today, most of these, for the weeklies. And we've just got the CAD Swiss today from an ADR perspective, which has already come off ADR. Don't think you're going to get a reversal now. You're not going to get a reversal on it because obviously the origin of the move was down here, and then we've gapped up and rallied. Well, we gapped up to there, actually, popped back and up. So I suspect, based on this move, that we will possibly get an A-shaped recovery on this, but it's difficult to tell. So we are very, very extended on all the Swiss pairs, as you can see. They're all due. There's lovely big propulsion gaps to the downside. They're all due a retracement at some point soon, but we'll just have to wait and see when that comes. It's been not so much parabolic, but grinding basically for a couple of weeks now. So since obviously they changed their interest rates again, as they always do. So with the Swiss now at 1.25 having dropped twice, that is now not going to bounce as we potentially thought it might do. So inflation change is at 0, has not moved, as we just had the news this morning. So yeah, there's no argument really for up, and there's no argument really for down, but they are dropping rates, which obviously, because everybody else is not really, we are starting to, but there's a good chance that the Swiss franc will obviously continue to be weak, but it will probably undo on its way to being weak. But obviously everything else is going to start to become weak as well. So that pound is going to drop. The euro has already dropped, but it looks like we're not going to be dropping in the next month, probably the month after, maybe even the month after that. So don't forget, everything else is starting to drop interest rates, so it becomes in line with the Swiss franc. So you should start to see normal market structure come into play on the Swissy, but obviously it is a complete wild card. It moves however it wants, whenever it wants. So if we have any other weird, unexpected things happening, like if Biden suddenly goes, actually, no, I'm not going to run for president, we might see a massive movement in the US. They may pull a load of money out of the US, stick it into the Swiss franc. The Swiss franc will suddenly power up because it's a safe haven, and you'll be back down here again. Yeah, so you just be careful with the Swissy at the moment. It's just an unpredictable beast. The yen's obviously, we did hit the 38-year high yesterday. There was a big drop. This wasn't an intervention move. Somebody messaged me on Telegram almost instantly and said, is that another intervention? No, it's just the US news being negative. So obviously this is a big drop. We've had a retest. So there is your M pattern reversal. So if we can break that low today, which I think is going to be very tough considering the US isn't around, but the UK, if the UK can drop US today and we can break that low and get an ADR in, that might well start an undoing of this move to the downside, which would be lovely because I just want out of it again. They're not going to intervene, it's obvious, and we've just had the grind. So we're looking for a pullback on this leg. So if you stick a fib on this, and again, Fibonacci is discretionary. So you may pick that level. You may decide you want, that's where the move started from because that was a news event. Or you may decide you want that, which is the monthly low. You may decide you want to go for the entire leg, but it's more likely for that. So if you look at it on a retracement perspective, that would be a flag break, 23. That would be a shallow pullback to 38. That would be a 50% retracement, which is back into previous resistance, which broke and turned into support. So those are your levels really to the downside that are likely if we are going to continue to rally. So today and tomorrow, obviously, today there's nothing. Tomorrow we've got non-farm payroll. So if the unemployment rate is bad for the US, it's going to come down. So it's a case of where is it going to find support. I will hold this US dollar yen until tomorrow. But we got that whacking great propulsion move there. And that is my break even. So I'm not quite sure what I'm going to do. I'm going to see what happens with price action today, basically. But I think my decision will be made for me on this one because I don't think we'll go anywhere today. And I think we'll be waiting for the news tomorrow, and that's when we'll get the move. And the move will either be that or that. So if it's that, which it looks likely, then yeah, hopefully I shall be able to get out of this finally again, and I won't be getting back in. If I do go contemplate it, you have permission to shout at me, because I told myself I wasn't going to do it because of last time. Excuse me, I've got itchy nose. And I did. So anyway, morning everybody else. Gregors, Bogdan, Footsie Rocket. Yeah, DAX long as well. Wouldn't exactly call it a rocket. In fact, there's $300 there. I might just take that. Pound even. 1.5 hour. I'm going to take one of those off. I'm not getting greedy with this today because we've got no US session. We're just approaching a triple high look. So there's a high there, and a high up here at this propulsion gap. So I'm going to put my second target up there, top of that wick. I'd be surprised if we get an ADR today. There's a couple of areas here. So that big strong move down, that is one massive propulsion gap. There, really, that's the propulsion gap, really, just above that level. So we've got these wicks here, so they sold the crap out of it. Added position, added position, added position, added position. Yeah. So all the trend line traders are selling the crap out of it here, which is why it's rallying through, because trend line traders are stupid. So we'll look at that area there basically as resistance, previous support. So that's a decent target to aim for today. DAX. That's 1 hour. I'm going to take one off from 1 hour as well. I wasn't expecting it to go this far today. This is more movement than I was expecting. Because we've got no US session. So I'm quite surprised by the amount of movement. So I'm just taking 1 hour here in case we get limit order triggers at that high, which is from Tuesday, which is high of the week at the moment. So we might find limit orders trigger there. But if we break that level, we're coming up into this propulsion gap where they started that sell move, which is basically TP2 today. I'm going to stick it in the middle of that. Not going to get 125 ADR, are we? I'll stick it there. I mean, it's highly unlikely we will get there before I get taken out on a trailing stop. But why not? There might be light liquidity. We'll see. So, good morning. 500 banked. Well, 500 open anyway. I can't believe they still haven't done an intervention after saying they definitely do it. I know. I can't imagine US dollar getting weaker than the yen without the yen actually changing something or doing a huge intervention. No, the US dollar will get weaker if it needs to. Don't forget, there's a lot of money been pulled out of the yen at the moment. So when you have weakness in the US dollar, if you look at the Swiss franc yesterday, yeah. So this is the news yesterday. So when you have weakness in the US, money gets pulled out of the US. When it gets pulled out of the US, it needs to be placed somewhere. So you tend to place it in safe havens and you place it in other kind of stable areas. So yen and Swiss are obviously the key areas we place money when we pull it out of the US, or other currencies which are pretty much stable at the moment. So you can see the Swiss franc didn't benefit yesterday. But if you look at all the yen pairs, not so much Aussie yen, there, CAD yen, oh, that was because of the CAD. Actually, well, they didn't buy the yen, did they? Yeah, there was a little bit, look. See, look. We had money coming into the yen yesterday when that news hit on the US. I thought I saw some correlation somewhere. Yeah, another pound. We got some money coming into the pound yen. And that is also dropping. So there is a little bit of yen strength coming in. And that's why you got that massive move on the US dollar yen. But if the US dollar is weak, this will still come down. Even though it may well be weaker than the yen, you'll still get a downward movement on it because they'll be selling the US yen. And because the liquidity will be light in here. So I don't know why I got such an itchy nose this morning. I get this sometimes after exercise. I've obviously been breathing too heavily. I've cleared my nostrils out. But I don't know, just making it up. But yeah, so we should still see a downward tick on that. It's whether or not it can get below that low. That's the key. Obviously, that was the buy. Look, yeah. So this is what propulsion gaps are all about. They show you where the bank orders are. Yeah. If the bank have bought something and they want to stay in it, they will continue to buy it at the level they purchased it at. They don't place all of their orders in one place. If they are still long on a position, when the market returns to their entry point, they will add to it, which means that you just hit that iceberg order and you cannot get through. And it's exactly the same as we looked at yesterday, this morning with the US dollar CAD. US dollar CAD hit a limit order at a previous low. So that is basically what happens. It'll come down, but it's whether or not we can get through this area. It's a very, 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 very strong support. And it will probably take a little bit of yen help, which obviously we know we're not getting at the minute. So, don't know. But this is why I will wait and see and play it by ear. In fact, what I'm going to do is I'm going to set an alert at that level. So I've got an alert set here. Just to let me know if we do get to that area, because I want to start closely monitoring this to see if we can break that. If we break that, then I think we're going to find some struggle there. But the news yesterday was a big shock. The news tomorrow rather, on the unemployment rate could be a big shock. If there's 4.5% unemployment rate or something silly like that, coming down hard. So we'll see. We'll see what happens. But I'm out of the DAX on a trailer. So there you go, that level. Limit order triggers. Again, limit orders triggering at the highs. So usual stuff. RSIs today. There's not anything on the hourlies. We had a few hourly extensions yesterday that are all kind of playing out today. Your extensions on the 4 hours, there's not much point in going through these because there's only one that actually, is there one? There's two that are not Swiss and yen. So as we know, the yen is massively extended. It's not stopped, and it doesn't seem to have any fight back at all, apart from the US dollar yen, which has. We've got the Swiss franc, as we know, absolutely getting killed at the moment. So everything extended against the Swiss franc. And then we've got the euro and the pound against the US dollar, which extended to the upside on the 4 hour as well. So you've got a signal to go short on the 4 hour on the euro US as well. So again, I'm in that. I'm going to hold. I'm not going to put a TP on this at the moment because I'm not actually sure what I want to do with it. But the euro, obviously, we've had it announced, obviously, that they've dropped interest rates, and Lagarde has said they're not going to drop interest rates for a month, possibly two now, which means that it may not be quite as bearish as we suspected. And if we get negative US news today, obviously, this is going to pop. So I'm not going to set a target on that. Tomorrow, the news. I'm not going to set a target on that to the downside. I think there's a good chance that we could come and retest these lows because it should be bearish. So same with the pound US. Extended to the upside. Yeah. So last spike we had was there, which you can't see. Oh my God, what's going on with my nostril? It's only my left nostril as well. It's really weird. So looking for that drop, basically. So pull back to propulsion there. Obviously, with the pound, we've got to be careful today and tomorrow. But we are expecting Bailey to announce interest rate drops soon as well, which would devalue the pound. So, we are expecting this to start to roll over at some point. So shorts on the pound will be the way forward eventually. And obviously with the pound, it's a case of with the US just announcing that they may increase interest rates, which I don't think they will. But we should see if the US was to power up. I mean, this thing's going to be back down here in no time. But we'll have to wait and see. So 4-hour extensions there. There's quite a few, but it's yen, it's Swiss. They're just decidedly dodgy to trade at the moment. And the only other options you've got are the pound US and the euro US. So market is going to go quiet because there's no US session. We've got unease with parliamentary elections in Europe and in the UK. So tomorrow we're going to get a new spike, but I think it really will be quite quiet until next week. And next week, obviously, we've got interest rate announcements for the New Zealand dollar. We've got the CPI figure for the US, which could well send that US flying in one direction or the other. So busy week next week. Nothing on Monday. Parliamentary elections again. So we could have a gap on the weekend on the euro again. So got to be careful with these euro pairs again. Same thing stands. Anything you've got on the euro in profit, get it banked tomorrow. Ahead of the news, really, is the ideal. Oh, just missed my trailing stop. There makes a change. Market actually not stopping me out in my favor for a change. Missed yet though. Afternoon, morning, Eve Callum. My unit's storage cage was broken into. That's not good. Have you got cameras? Not that that makes any difference because they never do anything about anything anyway, do they? Not having a go. Just saying they're a bit short-staffed and doesn't really matter what happens now. We were having this conversation the other day. We were trying to figure out what the limit was on shoplifting. We were having a coffee after a class on Saturday and we were having this conversation about how these gangs and people are going into shops now and blatantly just filling up their pockets and stuff with whatever they want up to the value of £200 because if they get caught shoplifting for £200, they don't even get involved. The police are like, not our problem, not interested. So basically you can shoplift 200 quid for free and go. Because that's the culture at the moment, isn't it? There seems to be a complete lack of any kind of prosecution in anything. If your bike gets nicked, they're like, hopefully it'll turn up. That's it. It's almost like vigilantism, isn't it? You've got to sort it out yourself. So sorry to hear that, Callum. But I wouldn't hold up much hope for anybody doing anything. They only took an old bike of mine, not expecting to ever see it again. Well, that's okay then. It's just the hassle, isn't it, of having to replace the lock, and it's more of an inconvenience, isn't it, these days of most stuff. All European indices are in strong buy. Most market participants are in London session. Not the US ones, though. They're asleep. What a silly law. I know. It's not a law. It's just a guidance. It's more of a, shoplifting now is become the norm. You see these gangs going in, and they're not just like blatantly filling their pockets. They will break in, fill their pockets, push the guards away, and then go out. But there's no, it's not as if they try and, anymore. They just walk up with bags, fill them, and go. And most of the guards and the staff are all told, don't get involved. So they know that the staff aren't going to do anything. There is a limit to which the police will get involved. Basically, writing a free check, isn't it? Not right, is it? But there's a cost of living crisis and people need to do it. Very, very weird situation we're in at the moment. Not really a law, as I say. It's just, there's been on the news, isn't it? guidance. Morning, Steve. But anyway, there's not a lot going on in the market, so we might as well talk about other crap. So DAX, I'd be very careful with these this morning if you are trying to hold positions, because you're not going to get a lot of volume today. We've had a fairly decent move on the FTSE, but you'll probably find that's it. We do something like that today. And the same with the FX market. I wouldn't hold your breath today. I don't think we're going to get a massive move. I might shut that New Zealand US. I'm going to take the New Zealand US off. Stick something in the bank today. Got to get that back, that loss at some point. Yeah, so that's all I've got for you today. If there's anything else you want to look at, let me know. Other than that, there's nothing much else to discuss today. It's one of those days where we are just kind of in limbo, waiting for something to happen. And the only thing that's happening is tomorrow afternoon with non-farm payroll. So I think you're going to find a quiet market. Sometimes before non-farm payroll, we do get a move into it as well as the market readjusts, ready for it. But most of the time it isn't. It's non-farm payroll day. So being the 4th of July, obviously it's very quiet in US, and we've got probably hangover day tomorrow in the US. So it's wet hair day, Steve. Yeah. I've been doing afternoon sessions recently on Thursdays, so I haven't had a wet hair Thursday for a while. Rushing back from my spin class. I was really hoping the Japanese would intervene today, since they intervened on a bank holiday last time. Yeah, day's not over yet, easy. But the thing is, the pressure was taken off yesterday, wasn't it? This is the thing. It's that move yesterday was what, 125 ADR, was it? Was it longer than that? Might have been 115. Yeah, it's about 125 ADR we got yesterday. So the pressure was well and truly taken off yesterday. We pushed back up to retest, and this morning the market seemed to be buying a little bit of yen. So there's no need to intervene if the market's going in the direction you want it to. But it's not at the levels they want it at, is it? By any means. That was the level they wanted it at. Somewhere around here. We're way above. So there is still a chance. It still could happen today. And, it's like I say, it's one of those things where you'll suddenly be like that, as we were here. But we usually get a rally before we get a dump. If you look at all the previous interventions, there's usually a massive rally before a dump. And it's basically a liquidity void, where they go, oh, we can't get any more orders in. Bang, and then they hit it. So that isn't always the case, but, we're probably going to base for a bit, I think, up here. This is new all-time highs. We're in market discovery phase at the moment, so we're up at new all-time highs. We haven't been here for years, for decades. So the market's going to want to sit and figure out how far they can go. 163 was kind of the limit called by some of the banks. We're only at 160, 162 we touched, didn't we? 161, 937 we touched. So we touched that big round number, 162. That may well be the new current high. But whether or not we pull back or we range, I have to wait and see. Yeah, I'd love an intervention. Absolutely love one, obviously, because it would make me quite a nice amount of money. But if anybody's got a direct line to the Bank of Japan, just give Suzuki a quick nudge, or your Ada. Morning, Mumo. There are still people trading the yen. Yep. It's a carry trade. The reason we buy US dollar yen is because of the interest rate differential. It's a carry trade. So, it's one of those ones where you make money just by being long on it. So there is a lot of interest by banks, but 160 level would surely be very uncomfortable for them. Yeah, it is very uncomfortable. I was talking to somebody else about this. One of the guys I'm working on an EA for, and he said, with the yen, because we're talking about back testing and how it doesn't work on the yen. And we were talking about the yen, and he used to work in a bank, so he's got much more economics experience than I have. And he was saying, there's him and a lot of people that he knows don't get the maths behind how they can function at this level, because something's got to be propping up industry at this level because of the exports from Japan being so weakened at the moment. It's almost like you're running your business permanently at a loss. And then we went to discuss the S&P 500, and I said, yeah, but look at the S&P 500 during COVID. Yeah. Right. COVID, businesses closed, not making profit. S&P 500 going through the roof. Yeah. That's also impossible, isn't it? From a theory perspective, if your business is shut, if the top 500 businesses in the US are having their profits constrained by no purchasing, no going out, no leisure, no holidays, we're not doing anything, but the stock market can do that while the entire world is closed. How is that possible? Yeah. Same for the yen. How are they managing to trade when their currency, what they used to sell things for, is here, and now they're selling it here? The costs of manufacture are still the same. They used to make a profit, now they're making a loss. Businesses were closed, stock prices went up. Yeah, so there's a lot of logic that doesn't make sense in finance that somehow seems to work. But, he can't work it out either. He's very much of the same opinion as I am. Something's got to give, or they go bust. It's literally that simple. Yeah. Think about it in the UK, if all of a sudden the pound dropped dramatically against every other currency, when you go on holiday, every pint you buy is now costing £10, not £5 on holiday, or £4 or whatever it is. Yeah. Going on holiday now costs twice as much as it used to. So the places we used to go on holiday, we can't go to now. So we have to go to other places. So Thailand becomes more busy because the Thai baht is devalued. So the whole economics of everything changes. Thailand now suddenly becomes richer because everybody in Europe is going to Thailand instead of going to Europe. The euro collapses. Yeah, so the one currency has a massive knock-on effect everywhere. Taiwan now cannot manufacture electronics and get them out to the US. So China becomes the leading electronics manufacturer, which it pretty much is at the moment anyway. But, it will just get crushed. We haven't experienced a currency going through a devaluation of this magnitude before. Like I say, this is a 38-year high. Yeah, this currency has not been at these levels since we've been manufacturing electronics, which is what their main export is. What happens next? We don't know. We've never been here. We've never had a COVID before. We've never had a COVID recovery before. We've never had an interest rate rally, the strength we've seen before. Yeah, there's so many unknowns going on at the moment. And this is one of the big ones where, everybody is guessing and everybody's speculating, but nobody knows what's going to happen. The Bank of Japan don't know what's going to happen. The Bank of Japan thought that would work. It didn't. The Bank of Japan thought that previous 160 intervention would work. It didn't. I can't zoom out anymore. Yeah, but they thought that would work. It didn't. They thought that would work. It didn't. Yeah, we got back to there. The market bounced, but it rallied through it. Yeah, so if that was the last intervention that we had, which was impactful and actually did make a pullback, who says that's going to work? Yeah, look how far we've been since the last intervention. In just about 8 months. Where are we going to be in 8 months' time? And what happens when we get there? half the businesses in Japan disappear. If that's the case, isn't it? But good luck rallying back from that level. You just don't know what's going to happen. It's a very, very, very weird market. Been weird for a year or so, isn't it? But look at it now. It's still coming down. Look. Strength coming into the end this morning. You could suddenly it just goes, and we'll all be sitting there going, "Ooh, that was good." Well, I will be anyway. But who knows? Very, 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 very weird situation with the yen. So this is why I'm not running the EA on it at all. But I have got these manual trades on, which I'm regretting being in already. But that market structure looks fantastic. Textbook head and shoulders. But we know how often head and shoulders work. Not very, do they? They tend to break, entice everybody in, and then make new highs. Because what it is just a pullback in market structure, disguised as a head and shoulders bear pattern. Just hope the yen drop to hell. Yeah, it would be nice. For me, anyway. And it tends to happen very quick. The reason it happens very quick as well is because if you think about your situation as a bank or institution in a carry trade at the moment, your P&L from when you got in here, or wherever you got into your position, your P&L yesterday went from consistent growth to drop. And this morning it's gone potentially like that. So you are seeing your dollar P&L suddenly start to drop. So you will be enticed to take a portion of your position off to bank it, to get paid on it. And as soon as you do that, you are causing a downward movement, which causes the other banks and institutions to see their P&Ls drop further, which causes them to sell, which causes it to drop faster, which causes more people to identify that there's a sell going on, etc., etc. People then start to jump into speculative shorts, which is why we see that movement I keep talking about, climbing up the stairs and falling down the elevator shaft. That is caused by panic because they've been building a position on a trend, making an absolute fortune of it, and now they're seeing their P&L get diminished. Everybody sees the same thing at the same time. Herd mentality makes that move undo, which is why we get the 50% retracements. But the retracements happen at 3 times the speed. Look at that. Buy, sell. Bang. 2 days, we undid 2 weeks worth of movement. Climb the stairs, fall down the elevator shaft. Panic selling. It only usually happens in buy situations as well. It's weird. It's like as humans, we expect gravity to take over. I don't know why. It just does. But when in sells, it doesn't tend to do that. It tends to do that. I don't know why. Weird. Hey, we don't need to explain stuff, do we? We just need to observe stuff and repeat it. So, anyway. But yeah, so coming down nicely this morning at the moment. But, this is one candlestick. This could end up as a bull candle. 10 minutes left on it, yeah. The end squeezed me, then took 20% of my account in drawdown control. A good but very expensive lesson, yeah. 20%, that's a bit late to be getting out. If I've got something that's sitting in 8 to 10%, I'm off. It's too much. It's too wrong. But, everybody's got a different exposure level. So, different pain threshold. But from experience, Mumo, you've taken a 20% on it. Next time, you won't take a 20% on it, will you? You'll get off quicker. I've been hit with that sort of drawdown before as well. So, you learn from it. There's always that saying I've said in here before. There's always this assumption that it has to. It doesn't have to do anything. It does what it needs to. It doesn't have to come down. Yeah. This holding on forever and waiting forever doesn't work. Backtest it. Doesn't work. It will do what it wants to do. The market will stay irrational longer than you can stay liquid. Ditched it until H2 next year, but by then they'll probably be servants to AI robot masters. Yeah. I'm not wiping the yen off. I'm not writing it off completely. Same with the Swiss. I'm just taking a break from them at the moment because we're in a situation at the moment with interest rates that is unprecedented, and I don't understand enough of the economics to know how to trade it, because I don't think normal fundamentals apply at the moment. Normal fundamentals will apply to all the majors, but the Swiss, because of its safe haven capacity, that is a very much an unknown at the moment as to direction, and obviously the shocks they keep doing. And the yen, because they are going for the first time in decades into a positive interest rate regime, no one knows what the impact of that is going to be. I don't know what it's going to do at the moment. It seems to be completely devaluing it. The whole point of them doing it was to power up the yen. It's having the opposite effect. Yeah, so what they're doing was designed to do the opposite to what's happening. So what the hell is going to happen next? I don't know. So stay out. The only thing that I think can happen is it can collapse. You know, the yen will collapse, which means this is going nowhere but that fast, isn't it? So, you know, normal mean reversion would dictate that there will be a profit take move. There's no need to take profit when something just doesn't stop. So they will keep piling into it. And unless they have the button press, which they don't seem to have because they keep threatening it, and the last time they tried it, it failed. So there doesn't seem to be any reason to do anything but buy it, does there? Which is fine. I'm not a trend trader. I can't hold it. I'm a mean reversion trader. It's ingrained into my human being. I can't possibly press the buy button on it because I just are useless at holding. I'm great at getting in mean reversion. So it's just not for me. That's why I'm not in it. But it's totally tradable, isn't it? It's just that you just want to buy us long. So I just don't get the economic. I don't get it how they're doing what they're doing, and why they're letting it happen. You know, if this was any other country, we wouldn't let this happen. We wouldn't let it happen in the first place, would we? Yeah, because we've got more economic foundation, I guess you call it. But then so did the Japanese. But don't forget, they're a tiny little island with a massive currency. Yeah, so they are a very, very different beast. Same as the Swiss, tiny little country, huge volume of currency goes through. Yeah, everybody else is bigger countries with very stable economics and currency. Yeah, the Swiss and the yen are just not like that. They are very anomalous in that respect. They're not the same as the rest of the majors. Excuse me for the JPY to go to heaven so GJ can drop. Yeah, that would be nice. GJ, yeah, well, GJ, you've got more chance of that coming down because of what Bailey's going to announce at some point with the pound interest rate drop. So you'll find that this will come out of sync with the rest. So you look at something like the Swiss yen. Yeah, the Swiss yen is out of sync with the rest. The rest are all parabolic, like that. Well, not parabolic, but they're grinding like that. The Swiss changed their interest rates unexpectedly, which has completely put the brakes on. The pound are going to drop their interest rates, which will completely put the brakes on. So that is got more chance of coming down in the next month than the rest without any intervention from the yen, because we are going to change bias on the pound. Well, I mean, I'm surprised, as I've said before, I'm surprised Bailey still hasn't done it. We're at target. Yeah, we still haven't dropped interest rates. It's like I think the whole market is like, come on, you know, at least tell us you're going to do it, because we are going to drop it. Just tell us when. And he doesn't seem to be doing it for some reason. And there's a chance with the inflation change that we've got at the moment of us overshooting, which he does not want to do. So I don't get why we haven't dropped. But when we do drop, when Bailey starts to say that sort of thing, I think it's going to come down pretty quick to start with, and then it will slow the rate of drop. So slightly worried about being long on any pound pairs at the moment, because he could come out any time and say it. There is no forecast speeches from Bailey coming up. We've got Powell. Sorry, that's next week, isn't it? We got Powell. We got the GDP. All right. So we got monetary policy report hearings coming out next Friday. So there could be something in there that gives us a little bit of guidance. Yeah, he's not forecast to speak anywhere. We've got the rates coming out for Euro in 2 weeks as well. Yeah, all coming up. Still long FTSE. Might get a bigger move on the FTSE today. We'll see. We just double topped at the daily high. Held it for months with wishful thinking it must drop. Yeah. Now set auto DD at -2% per trade. Yeah. Cut your losses early for better sleep. Exactly. Hopefully they are staying quiet because they are planning something big. Yeah, might be. You never know. This is the thing with interventions, isn't it? And I've said it before. We've been in here. Well, I've been saying, and it was here, wasn't it? I said here this exact day. I said I'm getting out. You watch tomorrow, and like clockwork, they did it. So, but there's no real signal here at the moment. This is just the market stagnating on the US news. So, but it will just happen. You'll be sitting here, and all of a sudden, Telegram will blow up. We'll be down here if they do it. As I say, I just don't know. I'm hoping, but I'm not. If I had to put a percentage level on it, I'd be about a 35, 40 on them actually being able to do another one. I don't think they can. Because if they could, I think they would have by now. But they're not saying anything, are they? Nothing in the news. GJ seems nicely extended yet. It's absolutely massively extended above the 80. If you look at the 80 levels, 80-20 on the 4 hour is very, 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 very good. So when we get there, it's not often you don't get a reaction. That was prior. So that was prior intervention. So that was the intervention run up, that one, which obviously then did an intervention. And we're there now. Look. So every time we get above the 80 level, there is a downward movement. Apart from there, which we got above 90 there, it did. I mean, it did. When the extension hit was there. So you did get a little one there. But then it carried on rallying, and then it came down, and then we had another intervention attempt. It's just it's how much powder have they got in their gun? Yeah, to do these moves, they need to liquidate assets. They're not buying as many overseas bonds at the moment, so you can't liquidate what you don't have. What do? Borrow? I don't know. This is the thing. This is what I was saying to my mate. Yes, the other day we were talking about it. He's coming from a banking background. He has a much bigger understanding than I do of how bond purchases work and how kind of, I guess, if money is stored, if you like, because obviously there's no tangible. It's just numbers stored, and the purchases of overseas bonds and assets that can instantly be liquidated is how they tend to do a lot of market movement, like market making. And he just doesn't get it. He doesn't get how you can reduce your overseas spending and your currency weakens. So what you're doing is you're taking the US dollar, which is making lots and lots of gains, and you're converting it into the yen, which is making lots and lots of losses. So what you're doing is turning the only thing that's making you money into something that doesn't make money, which means that you've got less money to be able to do something with it. It just doesn't work. It's backward economics. So his assumption is there's nowhere else to go because they have got nothing left. There's nothing left to do. What do you do? I don't know. But, again, there's bigger things at play underneath somewhere, isn't there? This is why these moves happen, because there is a possibility of them doing something unexpected. But you know, every one of these is a shot. Think of a 6-shooter. Yeah, they've shot a few of those. Yeah, you ain't got a lot of ammo left. If you shoot and miss and shoot and miss and shoot and miss, that's it. You've got a limited number of bullets. That's it. Once it's over, it's over. So you're reliant on that happening, which is basically US reduction in interest rates. They said yesterday, maybe we'll put another one on. Not going to help, is it? So I don't know. We'll see. Is it the start of the first currency collapse? Anyway, I'll be back tomorrow because I've got nothing else to discuss today. Live room tomorrow is going to be 7:45, so another morning session. So we'll have had 4 morning sessions this week. Aren't we lucky? And we'll look at basically the trade the FTSE and the DAX again. Have a look at what's happened this week and basically just get ready for the inevitable craziness of non-farm payroll, which is obviously tomorrow. There's the hourly candle in now, so another bear candle. That's good. So we'll get ready for non-farm payroll, which is obviously tomorrow afternoon. Nothing you can do about it. There's no point in me coming on and trading it because we're just going to sit here and watch a candle go like that. I have no control over it. So, but I will be closing out any US and CAD profit beforehand. So we'll do all that in the morning, have a look at all that. And then that's it. That's the weekend. We've got elections over in the UK with results coming out tomorrow weekend. We've got French elections weekend. So big chance of some gaps on Monday as well. So just got to be very careful at the moment. We're in a bit of a tricky period. And we're coming up to summer trading starting in 3 weeks. So market will contract. Brilliant. If it isn't contracted enough as a moment. But anyway, so yeah, we've got that to look forward to as well. All right, so have a good day. Anything you need, I'll be in Telegram or Discord. And I'll be back tomorrow morning, 7:45. All right, have a good one.